You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time once again for a little show we like to call around these parts the option block. A little bit of options wit, some wisdom, some analysis, some unusual activity, some what's on your mind. We get a lot of that these days, as well as, of course, some peering into the future. Start it all together. And you got the delicious cocktail that is the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the old Options Insider Radio Network. You guys know the drill. Quite a few programs, 15 or so to be precise. Easiest place to get them all, including all the back shows, the back episodes, the archive, the mothership, theoptionsinsider.com, where you want to just mainline the shows, iTunes, TuneIn, Stitcher, and so on and so forth. Even though we know we have a lot of cool stuff coming out on the website side, written, fun, old-school text content. You may like to read every now and then. If that's the case, the mothership has got you covered. Of course, you can always grab our mobile app, available for all the big platforms, or if you're in the hardcores, you can join us every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via the old Mixlr, MIXLR, and that's how you can, all you guys who are always asking us, hey, you know, how do I get it? Right into my ear holes instantly. I don't want to wait for the podcast to be ready. There you go. That's how you get it. And the archives are also up there as well, at least for a little while, about a week or so. So if you're, say, I want to go check those ones out, but you can't tune into the live broadcast, you can come in an hour or so later, and it'll be up there on Mixlr for you as well. It's raw, it's hardcore, it's not all pretty, but it'll get the job done for you. Speaking of raw and hardcore and not quite pretty, let's see who we got joining me on the old program today. Let's go in order. Let's see. This is how they come up on my screen. So let's go this way. Let's start in wherever the heck he's beaming in. I'm not sure where he is these days. He is the greasy meatball himself, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the program. And where the heck are you today?
I am at our global world headquarters at beautiful downtown Chicago on LaSalle Street, the financial capital of everywhere outside of New York in the United States, and the financial then the home of all derivatives and options, the derivative capital of the world, not just these here United States.
Yes, the derivatives mecca of the world, if you will. So yes, a lot of fun stuff going on. A lot of fun stuff going on, I'm sure, in the Option Pit and Carmen Line offices. Check it out over there, listeners, if you haven't done so already. You too can debate with Mark Sebastian about where exactly space begins and the atmosphere ends. He's a world-renowned expert on such things. Let's move our attention over now to a scenic, tranquil part of the Chicago suburbs, specifically St. Charles, where we are joined by Uncle Mike Tussaw from RCM Wealth Advisors, not from RCM Alternatives. Don't say that, listeners. You'll get in trouble. Just RCM Wealth Advisors. Welcome back to the program, sir.
Happy to be here from St. Charles, the exact spot where space ends and the universe begins.
Whoa, getting deep on us, sir. You're blowing my mind here. First, we got atmospheric versus space. Now we got St. Charles versus space. Before my mind is completely blown, though, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Let's kick it off with the old trading block, of course, the portion of the show where we tell you what's pretty much on our screens, what was going on today in the old marketplace. A bit of a quiet one, at least to end off the old day. Most of the major indices closing up pretty much unched to right around that level. S&P, Dow, and the NASDAQ all pretty much off slightly, or in the case of the NASDAQ, almost literally unched on the day. So not a heck of a lot of net day close-to-close movement here on the day. And, of course, a little bit of red, just a trickling of red on the screen means we're getting a little bit of green back in the VIX column to the point, not quite in the double digits yet, so don't get too excited out there, listeners. Even though, yes, we did flirt with it. We hit it at 10.28 today, so we did get over those levels, even opened in the 10 handle before giving up the ghost, getting down as low as 960 on the south side. I'll have to check. Our friend Mr. Rhodes is on vacation, so I'm sure he'd have where that falls on the historical VIX data point, but 960 is getting down there. That said, Mr. Meatball, we'll start with you. I'm sure you were watching these levels. Do you know off the top of your hand where that 960 falls on the historical level, and what else was catching your eye out there today?
I mean, that 960 is down there. I know we saw some 8 prints in 06 and 07, I want to say briefly, like an 896 or something crazy like that. But that 960 is one of the lower prints that we've seen. We did end up getting a little bit of a vol bid into the end of the day. And you got to think that we're going to see a little bit of, Comey risk start to hit. Futures caught a little bit of a bid into the close. They were actually net up on the day, I believe, which is interesting because, weekend adjusted, VIX did not have a good day, but then the VIX futures spread actually kind of widened out a little bit. So not VIX cash, VIX futures 1.75%. Or 1.75 points. That is really wide considering this thing expires in 16 days, now 15 days with today over. So I'm a little bit in awe of the way the term structure has been able to hold up. Call it the Fed, call it the Comey effect, call me floored.
Yeah, I think we all agreed on the show last week, Vol Views, that there would be a brief spurt of Comey related VIX activity, whether it would hold. I don't think any of us weighed in that it would hold throughout the week, as we've seen with pretty much every other event so far in the Trump administration, short-lived though it may be. The recent history not exactly leading into higher VIX numbers. No, really quickly, actually, that just kind of jumps to my mind. You mentioned adjusting VIX, bringing for the weekend. We say that a lot here on the show. I don't think maybe some people out there might be confused what the heck we're talking about. Really quickly, why don't you explain what the heck we mean by when we say, putting the weekend back in for VIX?
Yeah, all right. So one of the things you have to understand is the VIX is based on the options pricing model, right? I forget what the exact model they use, but it's basically some sort of form of Black-Scholes. So if you look at how Black-Scholes is actually built, it assumes that there is decay every day, all right? Now, that doesn't mean trading days. That doesn't mean there's not decay on Saturday and Sunday. The option pricing model assumes that options are going to decay on Saturday and Sunday. Now, here's the problem. There's no trading on Saturday and Sunday. So, in theory, then, someone could sell an option on Friday and buy an option back on Monday, and all other things equal, that would be by far the most profitable trade you could have, right, over time. So what do? We actually, over Monday, Tuesday, Wednesday, Thursday, Friday, the majority, not all, but the majority of the weekend actually comes out of options during the trading week. If you looked at a regular option when we settle on Wednesday night to where they open on Thursday morning, or in this case, where we settle tonight and open tomorrow morning, there will be some decay. And that is associated with the risk of, overnight risk, the risk of what could happen while markets are closed, blah, blah, blah. So there's some risk that does come out while markets aren't open, but, it's not the majority of that option's value. That option value comes out throughout the day. So looking at the weekend, we then take out enough of that process so that the weekend, by the time all of that decay has come out, kind of prices very similarly to the overnight risk associated with, close of business Tuesday to open of business Wednesday. That's really where the weekend ends up being pricing. So because of this, because we're kind of fitting in one overnight risk into 2.5 days of not trading, the VIX, which is this Black-Scholes model, reads that pricing out as if volatility is actually dropping, when in fact all we're doing is speeding up the passage of time. And so you end up with this effect where VIX is going to be kind of overly depressed by the end of the day on Friday. And then when we come in on Monday, that whole weekend has now shifted, and that gets put back into the VIX calculation. You'll see the VIX up on a Monday. So typically speaking, over the course of a week, the VIX prices out 0.5 to 0.75%. So with the VIX at 10, it's more like 0.5. So the VIX should price itself down to, let's say, 9, all other things being equal, ceteris paribus. If we just sit here, by the end of the week, the VIX will be around 9.5. And then if we came back in on Monday, it'd be right back at 10. That's kind of the way the model works. That's all. Obviously, that's the back of the envelope 4-minute description, but that's kind of the basics of that.
Well done, sir. And I realize we like to bandy about terminology and lingo here, and sometimes we forget to maybe stop and explain ourselves for the masses out there. So there you go. Quick 5-second, or in this case, couple-minute overview of all things, taking the weekend out and then putting it back in out there in VIX land. Speaking of putting things back in, Uncle Mike, what were you putting maybe back in your portfolio today? What caught your eye in today's activity, sir?
Well, there's not a lot of movement, but what I was excited about was the lack of non-movement in silver. And that, yes, it was up a whopping 4 pennies on the day today in SLV, that is. But what's interesting about silver is that I did take off the January 2019 25 covered call a couple weeks ago for 40 cents, bought to cover it. And now, by doing stuff, I have the ability to do something, but I'm not yet going to do it. I could sell the 26 covered call for the same price. So I was able to gain a potential $1 of upside by doing stuff. I've decided not to do it. I'm going to hold off for a greater gain, so to speak, or maybe tomorrow I'll cower down and actually do it. Who knows? But just in researching this and doing it, I know that we've talked about how hopefully we might be able to get some type of information on all the ins and outs of the second coming of my legendary apple collar adventure that we may relive in silver. Well, this is the second, I guess, update on it in 6 months. So either way, I was able to at least think about doing something today with that because of the lack of downward movement based on the recent upward movement over the course of the last couple of weeks. So that's probably the main thing that caught my eye today. The S&P did not make any new all-time highs today. There's some news coming out about the terror attacks in England. We have that happening. President Trump announced an investment in infrastructure today that is magically not going to cost the tax dollars any money. I'm sure that's going to be the case about how we're going to no longer have to wait in airports and everything's going to be hunky-dory with the airline industry now. Now, I'm excited that we are doing some things along those lines, but I have to admit I am somewhat of a skeptic as to when and how it'll get done. So in terms of what's happening today in the macro news front and the little things that are happening throughout our beloved markets, nothing major to report along those lines, at least from the things that are ticking on my screen.
Speaking about what was ticking on the screen today, one of your old holdings kind of lighting it up and maybe conspiring to keep the S&P from hitting those new highs, I should say. Of course, I'm talking about the old fruit company, Apple. They had their big worldwide developers conference. At least it kicked off today. It goes for several days, I believe, over there. And it just seems like a classic buy the rumor, sell the fact. Everyone was loving all the ideas for new iPhones and new iPads. And now that we're seeing them out in the wild, I think they announced today a new 10.5-inch iPad Pro, some new iOS features, some new watch faces, and a lot of little niggling stuff, quite frankly, and some things that were expected. So we're seeing a lot of selling of that fact. Apple off about 1%, one of the larger movers on the day out there, and otherwise pretty quiet day off about a 1.5 handle, still north of that ever lofty 150 level. So there has been some stuff, some back and forth out there. I don't know, Uncle Mike, we've talked before about you've kind of scaled back your I almost said Tesla, your Apple positions out there. You're not exactly slinging the size in Apple you once were. I believe you referred to it as your innovation index. You want to see that innovation index start to turn. Has anything started to turn you, either this inexorable increase in the stock price or maybe some of these products of late started to turn you back to the dark side? Are you still playing a will they, won't they? Or are you still blasting out those 70 puts? What are you up to out there?
Well, I did do a couple trades. I did do a few things in Apple.
Nice.
We are short the 152 half puts in the triple income strategy. It's one where it's one of 10 holdings. So, I mean, it's one where it's not near the concentrated collar position with which I once had, but it's always been a holding along with the triple income, the strategic night, and things like that. So I've always had a hand in it in some way, shape, or form. But I just have a hard time getting excited about And Apple is going to be a good company throughout time. I believe it. I think it's going to be a good, solid company. But is it going to go up by leaps and bounds like it once did? No, I don't think it will until it has something very innovative. But I do think it's a good company. It does pay a dividend. It's a core holding. It has very good fundamentals. But I just have a hard time being excited about their new partnership. I believe they have a new partnership with Amazon. They can now do Prime combined with Apple TV or something like that. And that's good, but it's not world changing. They've set the bar so high for themselves with how they've changed the world that if they're not changing the world, it's almost like a letdown in some ways. It's kind of like the New England Patriots. If they don't win the Super Bowl, it's a disappointing season. Their goal is to go 19-0, and if they don't do that, then they better at least win the Super Bowl, and anything less is disappointing, and that's kind of how I view Apple at this point.
Yeah, you're right. They kind of have set a ridiculous bar for themselves, and yeah, you're right. It doesn't seem like the market is liking what they're seeing out here in the space. Like I said, off about a handle and a half or so out there. So it's been an interesting time out there. Before we jump to the odd block, really quick, Mr. Meatball has, I know Apple's a perennial favorite with your stalwarts over there in the pitch chat. Were they lighting it up out in the Apple today, or were they kind of just sitting on their hands?
We actually did talk about it. We used several of my clients used this as an opportunity to trade put spreads on Apple as a way to potentially get short a little, collect a little income. Apple IV, if you look at it, is not as cheap as it used to be. It's definitely caught a little bit of bid. Back a few days, back when Apple was $145 and the volatility was at basically an all-time low, and everybody I knew especially me, was screaming, "Boy, you're a dummy if you don't buy calls." Well, guess what happened? Apple rallied really hard and vols up significantly. Anywho, that is we looked at today with it off $1.52, about 1%, and volatility up for 40 basis points as an opportunity to sell put spreads, and several guys did do that.
The juice not quite as cheap as it once was. Getting a little bit of vol love out there. Selling some premium out there in Apple, which is kind of interesting. I haven't talked about that in a while, so nice to see a little bit of dark side rearing up over there in Apple land. Speaking of the dark side, let's get into it. It's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, that funky tune means it's time once again for the funky portion of the show, aka the odd block, the portion of the show we break down weird, wild, head-scratching, whimsical, wonderful paper that is lighting it up out there in the old options market today. Going to kick things off. We talked a lot of energy names over the years now. They've been a leading offender up there with biotechs and mining and a few others, really, with names that have just tech in general that have always, they're just regular offenders here in the odd block. This is the name, I don't believe we've had this one on our roster before. If it has been, it's been quite a while. This is Cenovus Energy Inc, ticker symbol CVE. Closing today at $8.48, only off a dime. Still such a cheap name. That's still almost over, actually, 1% on the day. So an active name out there, at least from a downside perspective. Also a fairly active day out here in the old options to the tune of, so the name that does a odd block appropriate 237 contracts a day. Today doing a whopping 24,438, about 12 to 1 calls over puts, and that should give you some inkling of what caught our eye out here in the old name today. If you want to find it for yourselves, listeners, scroll on down using your platform, your vendor, your broker of choice to DEES, all the way out to DEES, and to the DEES 10 strike, the ever optimistic DEES 10 handle, where you'll find some size action today. Pretty much almost all of that activity we talked about, except for a decent amount of about 1,600 July 7.5 puts. So a little bit of playing in the front month. All the rest was pretty much all the way out here in DEES to the tune of the DEES 10 calls going up, including a pretty aggressive block of about 19,400 paper lifting the offers for about 50 cents. Over there on the ARCA, total volume on that strike on the day is about 22,000 and change, so a few thousand more flitting in after that initial mega chunk. Open interest, pretty much nothing to speak of, only about 587 contracts. So it does look, there was some size stock going up today too. We didn't get a chance to see if there were any real blocks coinciding with this, so we'll have to dig into that a little bit, but it doesn't appear to be on the surface that there were some blocks going up with this. That said, let's look back at the year that's been out here in good old CVE, and like a lot of energy names, things were looking better about a year ago out here in this name. This thing was printing around 16, flirting with 17, so pretty much 2x where it is right now. And ever since, about December of last year, it's been a long, slow side to the dark side here, all the way getting cut pretty much in half over the period from DEES to right about now here. We're hovering right around the lows. And at least on the surface, it appears like our friend here is thinking, you know what? This beatdown out here in CVE has been dramatically overdone, and I'm going to load myself up on some upside. In particular, 22,000 of the DEES 10s. Mr. Meatball, let's start with you. What's your feel here on this pretty aggressive and fairly sizable upside here in the DEES 10s? You think someone's saying, this far and no farther, the worm has turned? Do you think something else is up here in CVE?
Meatball, go at it.
Yeah. I got this one now. All right. So this was a play on. It's an energy play, and it's a call by, they're going way far out, all the volume, open interest on the strike. So it's absolutely an aggressive upside play, and probably some sort of oil play, or certainly an energy play. And I'm just not sure that that's going to work out very well. But this is either a hedge or it's somebody that basically is taking on deltas. Either way, not my favorite trade that I've seen.
So, Meatball's favorite trade of the year. Put that down in the headlines here for the show. He wants to put it on himself in his personal account. Meanwhile, let's keep on rolling into another name. We talked about this one before. It's been a little while since it's come up on our radar. This is Dynavax Technologies Inc. Easy for me to say. Sounds like a vacuum company, but no. They are a clinical stage immunotherapy company, so if you like your cheapy biotechs, yes, we got you covered here on the show today. This one closing $6.90, a decent day for them, up a buck or a whopping 17% out here in the old DVAX realm. And today, this is a name that does about 700 contracts a day, so not bad, odd blockly speaking. Today, doing nearly 14,000, slightly more puts than calls. Actually, pretty even volume. This thing was just lighting it up pretty much across the board. People had to get into this name, and they wanted to get in however they could, including potentially a tree out here in the AUG puts and some upside calls in June. We had a lot of weird paper lighting it up. Let's just get into it. Starting off with a funky spread / tree, call it what you will out here. It was the AUG 5, 6, and 7. Put tree spread. Not really a tree, though, because they weren't all really on the same legs. It's kind of funky. Anyway, it was starting off, catching our eye, 2,500 of the AUG 5 puts, paper gobbling those up for about $1.20. Then people are doing some more ratios, selling the AUG 6 puts, starting off with about 1,300 and change for $1.40. Also selling the AUG 7 puts, a block of about 800 for $1.90. Total volume on the day was decidedly more, about 2,300 of the AUG 7 puts, about 1,800 of the AUG 6 puts, and nearly 3,000 of the AUG 5 puts. So people liking themselves a little bit of downside. There's no real OI to speak of, so there were no rolls out here. And again, it wasn't all unidirectional, so it didn't have that kind of tree flavor that you might think with a three-legged type of put spread here. This could be a very indecisive, stupid spread. Might be a new one here for us here on the old show. I can see Tussaw's ears perking up. He's excited about that one. And that wasn't all. Also was some upside going on up here today. It was kind of just a pick your poison day out here in DVAX. Whatever you looked, it was kind of lighting it up, including the June 6s, which were fairly active. So you got some pretty near-term paper lighting it up to the tune of, starting off the day, about 900 or so, 2 mega blocks coming in 90 and 95 cents, so right around splits, around 92.5. As the day went on, a total of almost 2,000, 1,985 lighting it up, again on negligible open paper. So it's pretty much people piling into this name saying, we got to get in. They're doing it in AUG, they're doing it in the puts. Of course, a little bit of funky ones on the puts there, as well as piling in here to the June. Mr. Meatball, this is a bit of a funky one. You got any feelings on this? Maybe this is one of your crazies in the pit chat was lighting this up. What's catching your eye out here in this just explosion of paper out here in DVAX?
You know, this was one that was caused by the Apple conference today. There's some just some crazy stuff going on. In out of the Apple conference, that's probably what drove this, and that's certainly what drove the stock up. This looks like it was probably a hedge, and it could be the stock going a lot higher.
Yeah, it's funky. That put one. I want to dig into that put one a little bit more because that was funky. Got a lot of net buy-in on the downside there, which you don't often see on a name when you're looking, especially a day like today where things exploding up and people are looking to just get deltas any way they can. That's what you usually see. So they're buying calls, they're selling puts. We got that weird long leg there, which is kind of funky. And also for size. So that was the largest part of that trade, which is very interesting. A lot of weird paper going on. Speaking of weird paper, let's get through this last one here. Then I know, Mr. Meatball, you got to run, sir. Let's get off to, this is actually a rehash, looking back. You guys always ask us, hey, what happened in XYZ alert that you covered on the show 2 weeks ago or 2 months ago? We don't get a chance to do that as often as we like. We want to start rotating more of those here into the mix. So we're going to go back to a recent name that we covered here on the show. This was out in the old iShares MSCI Hong Kong Index, EWH. To be precise, this one selling off a little bit on the day, about 18 cents or so, closing 23.83. So it wasn't underlying that lit it up today, or indeed the day we talked about it, which was back April 3rd, a little over a month ago now, 2 months actually, here in on the show. And we talked about the 22 calls. Paper was gobbling them up that day. One block on the SIBO was for 19,000 and change here, as his name was just doing a ton of paper, including the first block that caught our eye was 1,123 paper buy-in for 65 cents. They went up to 70 cents, and be honest, they were just driving them up. People were just buying those things up like crazy, and it does seem like that was actually pretty well-timed paper. If you look at the stock here on the chart, this thing pretty much did nothing but take off ever since that paper went up back in April. The stock actually expired. These were May calls. The May calls expired right around 23.30 or so. So pretty well timed from 22. Where was it trading at the time? It was about 22.30, so up about $1 in that time. So not bad. The actually options went out right around $1.30 as well, so not a bad print. There was a decent amount of volume. Most of it came off. Obviously, as we went and checked, there was about only 3,600 contracts left open on the strike. Still a lot, more than you probably would think. These things were deep in the money. You think people would come in and blast them out and take their money off the table. But only about 500 traded on that expiration Friday. Most of those selling for around $1.20 to $1.30. So the trade actually looks like it worked out fairly well, all things considered. Mr. Meatball, I know you like looking at these indices. So let's take it home here. What you feel on our friend here? We profiled him back in April, and it seems he was pretty well timed in these EWH upside calls.
He was excellently timed in these. This thing worked out, about as nice as he could have really asked for. So good job, guy. You are excellent work. You're hired.
Thank you, sir. All that pinging means Mr. Meatball's got to go. You go take care of your little guy. Hopefully he's doing good. But before you go, really quickly, give us a little plug, a little insight. What's cooking in the land of the pit, sir?
Just make sure you're checking out the blog every day. And, if you haven't tried our wheel service, it's legitimately $7 for the first month. That's the cost of a cup of coffee. It's $47 a month after that. That's cost of breakfast at Ceres Cafe for you and a loved one with coffee. So check it out, and you might just like it. Go to optionpit.com/optionwheel.
Are you guys putting on wheel trades for people? Is that what that is?
That is what it is. It's the option wheel.
Oh, there we go. I like it. Truth in advertising. Check it out over there at optionpit.com. Meanwhile, we're kicking the meatball to the curb. Uncle Mike and I are heading on with the rest of the show. It's time for us to actually answer some of your crazy questions. It's Monday. It's Mail Block Monday. It's time to open up the old mailbag.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, we got a lot to talk about today. You guys have been lighting us up as usual. We'll see how many we can get to. Uncle Mike, you got your question answering pants on? You ready to go?
I'm ready.
I don't know what those pants look like, and maybe they have question marks. Maybe like Riddler pants. I don't know. Either way, I'm sure they're very comfortable. They need to be comfy when you're in a long session of question answering. First off, let's pay off some questions we asked you guys. It's a two-way street here. We asked you guys questions a lot too. Last week we asked you guys, hey, question of the week. Amazon just hit about 1,000 as of this time about a week ago. We said, who's next? Everyone's looking at Google. Google did just do it this week, but we were saying last week, everyone was saying who's going to be next, was it going to be Google? And at the time, Monday of last week, the Google 1,000 call expiring last Friday, so the 1 week call was trading about $4. That 1,000 put was trading about $8. And what piqued your curiosity? What did you want to trade out there? You want to sell that call? Did you want to buy it? Did you want to sell the 1,000 straddle, or did you want to sell the 1,000 put? Uncle Mike, what do you think ended up winning our poll on the week, sir?
I'll say buy the call.
You were right, and even though it didn't really work out, it got close towards the end there. About a buy 1,000 call for $4, 38% coming in. So the Bulls reigning supreme on here. Even when in the VIX land, we were talking about buying that VIX upside 13 call, I think it was, for 13 cents, something along those lines. Was it 11? I forgot. I think it was 11. And people wanted to buy that even going into the end of the week. So it was all sorts of craziness going on. We had a lot of bulls in our audience. Interesting stuff. Buying that 1,000 call for $4 and then a tie for the rest. Pretty much 22% wanted to sell that call or sell the put for $8. Only 18% saying sell the straddle for $12. This week we asked you, you guys who follow us on social media, listened to the show last week, know we unearthed some interesting data out there in Tesla last week, including the fact that, I did an informal poll of people, not just you guys on the show, but a bunch of other people I talked to in the business and the industry. And I asked them, if you had to pick what you thought the number one open interest position in Tesla would be, what would you think? And I got a slew of answers. Usually it was June, July, 320s, 350s, 280s, things that were relevant and actually reasonable guesses. And no, the answer was none of the above. It's, of course, like we said last week, these Jan 2019 50 puts. And so we asked you guys, hey, weird fact number one this week in Tesla. That's the number one options position. Number two, this is not something that was put on and set it and forget it, maybe back when the stock was nothing and kind of they just forgot about it. They continued to add to this thing. They've added about 10,000 contracts in the past 2 months alone, including about 200 going up today. People buying them for $1.20. So these puts are still active and they continue to be increased. Someone is adding to their already sizable Jan 2019 50 puts position. So we asked you guys, why do you think that is? Why do you think they're doing this? We gave you 4 options, some of them sillier than others. We said, hey, is this a extreme catastrophe hedge? Is this a newsletter wreck? Which some of the weird scattered small block nature of the paper kind of has a bit of a newsletter feel. One thing is missing is that one big block to kick it off. But that said, does have a little bit of a newsletter. I'm not sure what newsletter is out there recommending these things. I'd like to go find it if that is indeed the case. A silly one, extend your warranty for the Model S. You'll see why. We have a listener question in a little bit that inspired that. And then last but not least, only an idiot would buy these. Uncle Mike, what are you feeling, and what do you think our audience is feeling here?
I have to go with only an idiot for both of them.
Ah, well, there you go. And you are, at least so far, you're feeling what our audience is feeling to the tune of, let's get the actual numbers here. Here we go. 43% so far. We only posted this like an hour before showtime. So you got all week to weigh in if you haven't done so yet, listener. But in the first hour or so, the initial blush, 43% saying only an idiot would touch these things. 14% actually going for the Model S extended warranty, which I thought was kind of interesting. And, it's a tie actually, and 43% for the extreme catastrophe hedge. Of those 4 suggestions, probably the more quote-unquote reasonable of the bunch. You got all week to fire off. If you haven't, listeners, head on over to @options. Let your voice be heard. A lot of you have already done so. Fed Zeppelin. I like that handle. Says, the shorts are learning there's a better option than getting squeezed via the stock, so they're coming in on these puts. That's what he thinks. We can have a discussion on whether the 50 put is the best choice for that if you're getting squeezed. But yeah, that's what he thinks. I've heard crazier explanations for this. Option Drone has an interesting one. He says it's against a short CDS, of course, a credit default swap, listeners, or an out of the money put in. Over the counter put in the name. I'm with you. I kind of thought that first blush as well, and I'm still kind of leaning that way, except for the fact that it's this weird trickle of paper that's coming in on this one, which if you're usually trying to hedge some sort of size OTC position, you're not doing 50, 80, 100, 200 contracts a day for 2 months. You're going to get that off a lot faster, unless this guy is continually adding to his OTC position and hedging it and listed. Stranger things have happened, but it is the odd continuation of the paper is kind of what has made me wondering. And who else? Contango Trader saying that David Einhorn, a known trader out there, is long a bunch of these Tesla puts. So I don't know how he knows that, but he's saying this guy is the one buying them. So I don't know, Uncle Mike. Are you buying maybe the short CDS one? It's probably one of the more reasonable suggestions we had, even though the scattered paper is kind of a weird way it's going up.
There is definitely the scatter, but I am not a buyer of that put, unfortunately. I'm not a part of it. But that is a little bit more on the reasonable side. I would have to agree with you. It's kind of like we always used to joke. What was the one the puts that you said that I was selling on XLE? What, the 20 puts on 30, XLE?
It was like 35 put, wasn't it? Something like that.
Yeah, that's kind of what it makes me think of.
Yeah, it has a little bit of a flavor. They're still getting $1.20 for these things. So even the 50 put has some juice in Tesla land. All right, speaking of Tesla, you guys can't get enough of it. We got this question from this kind of inspired one of our suggestions here today from Adam. We've gotten a few of these over the years now, so apparently he's not the only one thinking this. He says, "What's up, Option Block? What's up, Adam?" He says, "I'm thinking about getting a Model S." Well, ballyhoo for you. He goes on to write, "It's not a small purchase, about $85K, so I'm a little concerned about the future of Tesla Motors. Will it be around to service my pricey vehicle in 3 to 5 years? So I thought I should purchase some insurance. The longest listed puts are January 2019, as we just discovered this week. I don't want to pay through the nose, so I'm thinking about picking up the Jan Par, aka the Jan 100 puts. Let me just pull those up on my screen while we're talking here. The Jan 100 puts for about $4. By my math, if Tesla goes bankrupt, I will be sitting on a cool $96,000 more than the cost of my car. If it doesn't happen, then I'll probably roll out about 6 months out. So it'll cost me a little more, but all in all, I don't foresee, spending more than about $1,000 during the life of the car. Am I crazy for thinking about doing this? Well, judging by the fact you're not the only one who's hit us up about this question, you're clearly not the only one with these thoughts or concerns. And it's not an outlandish thing to be concerned about the future of a very new and novel and still cutting edge and still, frankly, controversial motor company that, who knows if they're going to be around. They're hearing issues about the, Model 3 production issues and questions about these rebates that have been driving a lot of the sales of the cars. Those things are capped, so those are going to be going away soon. And once they start hitting those caps, so that's going to reduce the sales incentive. They're spending all this money on things like the Gigafactory. Will that work out? There's a lot of questions out there. So, you're not crazy. Just look at the short interest on Tesla. You're not the only one out there who's thinking this thing may have some dark days ahead of it. That said, using the listed options as a bit of an extended warranty is kind of an interesting. Just as an aside note, I have gone through this. I do own a car from a company that is no longer existent, and people pick up those warranties. Other dealers will honor them. So the service side, I don't think you have to worry about that. Your car will will be serviced. Some other dealer will be smart. They'll buy that's an asset. They will buy that and they will service your car because then they can upsell you all kinds of other stuff. So that probably will continue. I mean, the electric stuff may be a little bit challenging, but someone will pick that up. And so that part I think will be around. But what about this trade he has constructed here, Uncle Mike? What have you had any one of your retail clients ever hit you up on this? What do you think about our friend? He wants to spend about $400 for looks like he didn't say amount. I'm guessing a one lot here of these Jan 100 puts in Tesla.
So if it's a Jan 100, so if you're doing that, wouldn't that be where's my math wrong on this? Wouldn't that be $10,000 if it were to go bankrupt on the Jan 100s? Am I multiplying that wrong?
Let's see what we got. I wasn't checking his numbers. I was getting the next question queued up. Yeah, so he didn't say how many he wants to buy. So I was assuming he might want to buy more. So he wants to buy enough so that he wants to 10 lot then. So he wants to get enough to cover his 100,000 approximate purchase.
Okay, got it. Yeah, because if you do, I don't know if I would do that per se. It's one of those things to where if Tesla did go bankrupt, it's funny. This is kind of like a societal war type of trade is what I call it. Because let's say that you have someone that's barely making ends meet, hates rich people, really hates rich people that drive nice cars like that, sees the rich person buy the hottest rich person car on the market right now, hottest car company on the market, or that company goes belly up, and then he ends up being profitable on the deal because he bought these things called put options that the person that isn't very wealthy has no idea what the heck they are, and he's somehow profitable and got a free car out of the deal. In a way, that's one to where I kind of hope it works for the guy, and I would kind of hope Tesla would go bankrupt just for that reason. But I personally would not do it for that reason, just because if you're concerned that they're not going to be around to service you, then it's really not it's not protection, because like you had said, Mark, someone will pick up the service agreement, and excuse me, and it's not protection. It is just more along the lines of a trade. Now, if you want to make a trade on that, there's plenty of reason to believe that Tesla could go belly up over the course of the next couple of years. There's no doubt about that. It's a very volatile stock. But as a protection trade, I don't think I would do that one.
Yeah, it's a trade up spec. There are easier ways to spend a few $100 and have it work out in your favor. Speaking of working out in our favor, we're looking here, and earlier we were debating whether or not here those calls in Cenovus, whether they were done tight or not. Our old friend, the Flow Master, Henry Schwartz from Trade Alert, he's floating around there in the chat room, and he, of course, has the answer as always. He says these calls went up. They traded about the lion's share, about $20,000 for, like we said, 50 cents a contract. These were the D10 calls, listeners. They were done untied. So that answers the one lingering question we didn't have a chance to get into ahead of the show, which was this done tied or not? Obviously, if they tie it up, a little bit of a different trade than what we got going on here. Straight up looks like it was straight up, so it does appear to be another sizable swing at ye old fences here in good old what was that, Cenovus. All right, let's move on to some questions here. You guys are just hitting us up all over the time. This is parallelism. I like that to handle. He or she asking, hey, what site are you using paper on? I'd like to learn options using paper. I'm going to intuit a little bit what you mean here. Hopefully no offense is taken. But there's a couple of things. We talk about paper a lot here on the show and on our site. Usually we mean not paper as in paper trading, but actually paper as in a term that implies large, typically institutional type customer flow coming in. So paper buying calls means large buyers of calls, like in those Cenovus. That'd be paper buying that. That's kind of just euphemism from the old days when someone would walk into your pit with a paper ticket and it had papers buying these things. That's kind of where that comes from. So when we say paper, we mean that. That said, I have a feeling you're asking more about paper trading. So we've talked about this before. Pretty much just about every smart major broker that works in the option space has realized the value of allowing you to come in and kick the tires on pretty much the full suite of the platform. So all your major ones, your OXs, your TOSs, your IBs, your others will have some sort of major. I'm not sure about IB. Maybe Uncle Mike, you can confirm that one. They have because you're active. If they have a good paper trading version, I played with all the others, and so they understand. It used to be back in the day they give you some really weird kind of scaled back version of the platform, and you had to open an account to get the good stuff. And most of them realized that was stupid and self-defeating too, so they've dialed that back. They let you come in and pretty much get the full kit and caboodle. Because if you want to do something weird like iron condor ratio swaps, you need to have access to the full tools and all the drop downs and everything to trade that stuff. And if they're not giving it to you, they realize you're not going to do what they want you to do, which is actually open and fund an account. So they give you the full kit and caboodle. So I can't think of one that has better paper trading over the other, because it's pretty much just the platform at this point. If you like one platform over the other, then that's the way you should. Some of the smaller ones still don't have the robust feature set on the paper trading side. So if you want to kick the tires, stick with the main ones. They got you covered. That said, Uncle Mike, have you ever seen or tried the IB paper trading stuff? Is it up to par?
I have not messed with the IB paper trading side of it. I think IB is a good broker for if you're like a hedge fund and you need certain reporting things. I don't think IB is very good for retail clients personally. I mean, it has its place, but I think it's a better for institutions that have specific institutional needs personally. I remember when, this would have been, I'm dating myself, over 10 years ago, when Options Express came out with a paper trading platform, and all you had to do was open up an account. You didn't have to fund it. You just had to open up the account, and that was just revolutionary at the time. It was a huge thing. Everybody loved it, and it got to the point to where I remember we'd get phone calls from people complaining about bad fills on the paper trading platform. And so finally, what I ended up just telling people, I was the director of education at Options Express at the time. I just remember telling people at events and webinars and things of that nature, just do market orders every time on paper trading. That's my recommendation to you. I obviously do not recommend doing that, especially back then when the spreads were wider. I obviously do not recommend doing that with real money for a lot of reasons. But if you try and do a limit order and try and get that exact perfect fill, it's not going to work the same as what it would with real money. You're not going to convince someone or change the bid offer on a paper trading platform because it's paper. It's something that's done in some way. And it was a very hard thing to get through to a lot of people. And my point with all this is that Options Express spent company dollars having me tell people what I just told you guys on specifics on how to use the paper trading platform, in the hopes that eventually at some point down the road when they were ready to trade with real money, they would start to do so. So eventually they just mirrored the actual platform. They just kept a few things that weren't in it. But I would say I don't think they ever worked up to condors in the paper trading platform. I'm not sure whether they do now or not. But one thing that I do know is that if paper trading gets too far, it's one where brokers really don't like having that on there, just because it's not a lot of times a revenue generator. And the conversion rates, at least that we had at Options Express back when I was working for them back in the day, was not something that was significant of unfunded people. Now, where it was a good tool was for current clients. Let's say you were normally a spread trader and you wanted to try doing some type of an exotic condor ratio trade or something like that. That was one thing to where the current clients already trading, trying new things, it did eventually lead to more revenue a lot of times. I don't have any statistics to back this up, but from my experience of just being in the mix with a lot of Options Express clients, a lot of times that seemed to work. I know I did that very frequently back in the day when I was trying to keep up with the platform and that type of thing. But overall, from my experience, brokers kind of do that begrudgingly because a lot of times, at least back then anyway, it didn't really lead to a lot of account conversions.
Yeah, I'm with you on that. That used to be, I think that was the profound mentality not that long ago. I think a lot of them seem to have come around because they know if they're not going to get you to fund right away, the least they can get you to play in their ecosystem. So we have seen a lot of people kind of reinvesting in that a little bit more, hoping that they can bring you over to the dark side along the way. That's why I also wanted to ask you, I'm glad I asked you about IB, because I had a feeling, again, I haven't played around with it, and I got the feeling they're not known for doing those kind of little tweaks that would incent these guys we're talking about, the active retail to come in. So I had a feeling they probably wouldn't be the best paper. I'll have to go check for myself to make sure that's the case, but I got a feeling that probably is not here. I'm just looking at some of the people firing off with comments. You mentioned Tesla. It's like mentioning Trump on Tesla or on Twitter. The comments just come willy-nilly, and some of them are, shall we say, very motivated. It's very distracting. You can go down a rabbit hole of this stuff. Instead, I'll go down. Let's see, we got time for, let's see, one more here. Mike, I usually don't like to say this phrase. It is oft quoted. It is the definition of a market cliche, but this guy's handle is so good, I'm going to let him say it. This comes from the Giddy Franciscan. I just love that. He may get our award for Handle of the Year, if we had such a thing. The Giddy Franciscan wants to know, sell in May and go away. What option strategy benefits from the profound, he says, profound market malaise that occurs over the summer? I like this guy. This guy's got a great handle. He's got a little bit of, he's eloquent, but pithy at the same time. The Giddy Franciscan, he's getting my, even though he used the most ridiculous, overused cliche in the business. Well, we've been talking a lot about this on this show and also on Vol Views a lot. The one trade that everyone and their mother seems to be in right now. It's counterintuitive because Vol is so low, VIX is so low, but that short Vol, short VIX trade has worked very well. And all the ETFs that have done well out there have profited from it as well. Of course, the downside of that is A, that's super risky, particularly if you're net units. And then B, it's super crowded now, so it's nowhere near as juicy as it was a few months ago, or shall we say, getting into the early days of the Trump administration when everyone and their mother, including myself, was convinced that Trump was going to drive us into the 20s in the VIX, not into the single digits. So that's still the trade, even though it has been squeezed out and it's a little dangerous. That's why I'm hesitant to just recommend it willy-nilly. I don't know what level the Giddy Franciscan is at here, and certainly not short units. You don't want to get run over when the VIX inevitably does explode to the upside. Uncle Mike, you must get this question on pretty much, I'm sure, a regular basis, particularly around this time of year. Your clients hitting you up saying, what should I do for this, as our friend here says, to address this profound market malaise using options, sir?
The profound market malaise. That would be a great title for the show today. I think I vote that for our show title today.
I'm okay with that.
All right. Well, that can mean a lot of things. The sell in May and go away. A lot of people have different interpretations of it. Some people believe, the rich bankers on Wall Street just go to the Hamptons for the summer and they sell everything and the market doesn't move. Other people believe the market goes down a lot. So the perception of sell in May and go away, from my experience, varies a lot. I personally don't put anything into it with the way with which I manage money because of the fact that the basis for which I'm an investor is that I'm long-term bullish but short-term cautious, meaning if the market starts going down, I'll hit the figurative sell button as quickly as possible and get out or hedge or do whatever I feel I need to do in that situation. If the market's going up, hey, let's watch it and let's have some fun with it. I'll let Mark, and Andrew make fun of me for being the hopeless bull with which I am, but who cares? Account values are going up. So for me personally, I don't work it, but there is a lot of profound evidence for the truth to it. And so in terms of what's the trade for it right now, if you're looking to trade that, I would not want to be a vol seller right now, meaning if you're of the belief that the market just kind of sits still all summer, it's the summer doldrums, no one really does anything, I would not want to be selling premium right now or selling naked short straddles or anything along those lines, just because of the fact that it's a very distinct possibility that you could get your face ripped in. Just look at some Augusts that we've had recently. And it could obviously still happen in June or July. So I don't know if I would necessarily want to be going that route. If anything, what I would do right now, if I wanted to be a premium seller and I just can't handle being a premium buyer, I would do something along the lines of doing a calendar spread, meaning I buy some type of premium in, say, September or October, and then maybe sell some weeklies against it at the same strike price. either on the call side or the put side. I think that would be the way to go if you believe the market's going to sit still over the course of the next few months. If you believe the market's just going to crash and go down, this is just a great opportunity to just buy puts. So I would say if those are the two things that most people believe, because Mr. Giddy San Franciscan, I'm not sure which camp you're in, but if you're in you most likely are in one of those two camps. I think those would be the two alternatives of which how you can match a strategy to your specific sentiment.
Well said, sir. We got to leave it there because it's time for our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we break down what's on our radar for the rest of this week, at least until we get back together here with you guys on Thursday. And as we alluded to at the top of the show, not really a heck of a lot lighting up our screens this week. We got the kind of endless Comey saga unfolding over there. That's bound, hopefully, at least to inject a little bit of life into this market from a vol perspective over the coming week. But if recent history is any precedent, then it's going to be very short-lived. So we're kind of prepared for that. Aside from that, not a heck of a lot lighting it up on the earnings front, unless you're really excited about perhaps Duluth Trading Company tomorrow, or our friend the Giddy Franciscan. Maybe he's excited about Francesca's coming out tomorrow and reporting after the bell, before the open. So there you go. Not really a lot of big names reporting this week either. WWDC seems to be one of the big market-related kind of single name drivers, so we'll pay attention to that. Maybe, who knows, maybe Apple will flip the script and Uncle Mike's innovation index will flip and he'll dive right back in. That said, Uncle Mike, aside from that, what else are you watching this week, sir?
I'd love to see Apple flip the switch and get something really cool to come out. That would be so fun. I want to see them change the world again. That's just that the bar's too high. It's like the New England Patriots once again. I'm just watching the markets in general, watching to see if I can say my trademark saying again on the show on Thursday. It always excites me to do so. Keep an eye on energy, folks. Everybody hates it right now. It's down. XLE now might be a buying opportunity for those of you, if you're like me and are a long-term bull on energy.
All right, listeners. That music means we have come to the end of the Around the Block segment, and also this very fun episode of the Option Block. We talked about a lot of fun stuff today. Got in kicking it off with WWDC, explaining taking the weekend out and putting it back in over there in VIX land. Got into some weird paper in Cenovus. Thanks to the Flow Master for clearing some of that up for us, as well as over there in Dynavax Technologies Inc, ticker symbol DVAX. And looking back a little bit at some paper we talked about a couple months ago over there in EWH. Then, of course, all of you had some thoughts on Tesla. It's the controversy driver of the day, shall we say, up there with Mr. Trump. All you guys were weighing in on that, as well as our profound market malaise. I'm with you, Uncle Mike. It might be a good title for the show. But before we go, Uncle Mike, what is cooking in the land of all things RCM Wealth Advisors, sir?
If you are looking to trade, and most people out there in our audience do, feel free to contact me. We have relationships with TD Ameritrade, Interactive Brokers, as well as Trading/Money Block. We have the ability to help you trade at no ticket charge for 35 cents a contract, sometimes less at other brokers. Feel free to contact me and learn how that's possible. Of course, we do charge a small fee for that, but oftentimes the small fee outweighs any ticket charge that you can come up with. And if that's something with which you're interested in, I am at 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
All right, listeners, you heard the man. Hit him up for more. And on behalf of Uncle Mike and the Meatball, who had to leave us a little bit early, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, whatever the heck it is you do to listen to that show. We love you. Keep hitting us up with those questions, too, including all you with cool handles out there like the Kitty Franciscan. I love it. Keep them coming, and we'll see you next time for more of the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.